There we go. Okay. My Excel worksheet. Can you all see this, everybody? So this is my Excel worksheet. What happened was we were able to buy that at 64 a door. Can I make it a little bit larger? Let me make it larger so that people can see it, I guess. Let's see here. How about now, right? A little bit better. Okay, 191 units, 12,224,000, 64 a door. They wanted 67.5, I think. So I got down and everything. Then I got about 95,000 repair credit, all that. And these were the numbers right there. Physical occupancy, it was 97, 98% occupied all the time, all that stuff. So just to kind of show you, that's what we look for. We look for the utility reimbursements. We look for the income that's going to come from the vending machine and other things like that. Then of course, taxes has to be also looking at. That was the lower base. That's the higher base. Insurance, repair allowance, all that. And at that point, it was giving cash on cash of 10.2%. I can even do it where I give a little bit more first year, then I take it back. So that's what I want to show you all right there in my 5-year projections. Everything, the first year I gave my investors 75% of the cash flow to make the numbers. But when we took the next year, we took it back to 65-35, 65-35, 65-35, right there. So the thing I wanted to mention was, let's just go here to underwriting. This property, what we was, this is a good one to talk about right now. See, down payment 20%, you got to really have the extra money unless you know you are going to get 80-20 loan. If you think that it's going to be 25-75, LTV of 75, you better have 5% more money ready, because that's almost 600,000, and you find out just a few days before you close. So just to come back here, that's what happened. I was buying this property along with my Riverside property, which I just sold, by the way. That one I bought for 10,100,000, sold it for 15.4. I'm getting offers for this one for 18 million. I get every couple of weeks, a buyer calls me, and that's only 2 years I have bought it, just 2 years back. I closed them in 2017, Jamie, you know? So essentially, the key thing is you got to look for the nuggets. That's what is one thing I wanted to mention. The other thing is I wanted to mention was, when you look through all these numbers, don't just take everything that is written in this OM. Never, ever take everything from here. This is the biggest bride. I mean, they have to sell this sucker, right? They're going to put all the best pictures. They're going to do all the performance numbers. They're going to put all the assumptions. Oh my gosh. I don't know if you've seen the assumptions they have put in any operating memorandum. They show you all these glossy numbers. Then the next page, it's a whole page filled with 3%, 4%, this, that, all. A lot of people don't look into that. You should look at the rent roll and the rent roll alone to determine where the property is going. And then P&L to find out the expenses. P&L to find out the expenses. So again, you know, I could go more deeper into it if you'd like to. I look for at least 10%. This was like 2 years back, 10% cash on cash. Yep. So you have to have that much. Now with the new product, I'm going even 8% cash on cash, by the way, 7.75 also, because these are better deals. These are B plus deals. If there is some questions, I would love to answer. I can go back.
I did find the question from Stephen, who thought this, that's probably why he thought this was not live. He was asking because, so for this deal, for example,
yes.
Let's say you toured the property and you were not the Vinney Chopra that everybody knows today. Yeah. And you said, I'd like to put an offer, but they're asking for a proof of funds, and you're syndicating. How do you present a proof of funds, or how do you?
Good point. Very good point. What I teach in my academy is that right away when students join, I say, make a team, get a partner, look at your net worth, They could look at, many of them have not done financial statements, but go ahead and find within your circle of influence, I call it, to get somebody who's got high net worth, because they will be able to give you their financial, like you can write out, the text, the account number and everything like that. There are also people out there who sell this also, by the way, so you can have them get you proof of fund from them by paying some money also. There is always a solution. That's the mindset one should have. We didn't have nothing, literally nothing. Even the 109 units deal that I just talked about today, everybody turned us down. Everybody, no bank will give us money. It took me 11 months to buy that deal, right? 11 months since we started, but it took us 6 months to massage the seller, and we said, okay, give us the seller financing. Seller financing was at that time, we said, let's do it. We said, okay, how about 80-20? He didn't want to even come on the table. We said 70-30. He didn't want to come on the table. He said, you are new people. We gave 40% down. 40% down. We said, I know we're going to raise the money, so why not give them $1 million down, 6% interest rate, next year 7, next year 8, next year 9%. Mm-hmm. Promissory note. We said, let's do it. So we've creatively found a time, and rest is history. Now, by the way, we can get loans are so cheap. I got loan for 3.82% for my $52 million deal. 3.82, 10-year fixed, 5-year interest only. Freddie and Fannie were fighting, but Freddie won because they gave us the rate lock and waived the $80,000 fee. $80,000. We saved that money. We said, you are in.
That's incredible.
With the new deal we are getting now, 3.52%, guys. 3.52. This is the cheapest money ever you can ever have. And interest rate might even go down 2 more times next year, because when the economy shrinks, the interest rate has to be lowered if the inflationary is not there. I'm not an economist, but do you do cost segregation? Yes. We just paid $10,000 to the best company in Florida to do the cost segregation. Are you ready? Out of $52 million deal we just bought 2 months back, 10 million is about land, but out of 40 million, 12 million is going to be written off by this December. Guys, this is amazing time with the bonus depreciation from President Trump, and also the cost segregation. We do it in all assets. That's the best things. Our investors love it. They get so many dividends, they get so many cash flow, but their K1 shows the property makes, like, let's say $2 million profit, right? Or 3 million, but the depreciation of 12 million or 10 million coming in, it's going to show minus 6 million on the top, minus 6 million. And 70% of that flows into the LP side to our investor equity partners.
Investor equity partners. Yep. Equity investment partners. I love that. That is fantastic. And yeah, cost seg is, it's something I did not know and understand before I got into multifamily, and boy, oh boy, it is a thing of beauty. Hey, Vinney, do you real quick stop sharing for a sec if you don't mind?
Oh, I would love to.
Okay, just for the delay. But hey, here's a question I would have, if you're cool with diving a little bit more on the underwriting, because we got some time.
Yes.
I'm thinking about, like, folks I've talked to, and we get into a position, or they're looking at a package and they see the actuals have like an inflated amount for, say, repairs and maintenance because of some CapEx or whatever the case would be. How do you normalize that? Or maybe a bigger question is, what are like the things that people get caught up on when they're trying to analyze a deal? Maybe 2 or 3 tips that you can give folks when they're analyzing a deal and looking at the actual numbers that can trip you up. Like, is it replenishing reserves? Like, what do you think it is?
I love it. See, the thing is, if you feel, I always ask the broker, hey, give me quick things, I can make quick decisions, right? I want the pictures. Even though I live right here near San Francisco, majority of my brokers are able to give me the link to their Dropbox. That's the word. I did that yesterday with the Jacksonville broker also. He says, Vinney, sure, I have professional pictures because they are putting together all these things together, right? So they can give you the link. You are almost walking into all the pictures you can see and all that to look at the different maintenance. I try to ask them how much money the seller put in the last 5 years. I'm very interested how many condenser units they change, how many appliances they change, how old are the roofs, how old are the boilers, and how is the plumbing and all, any kind of troubles like that, which we will be running the camera through the sewer lines. Definitely do it if you're buying older properties. I got hurt one time. I had this great property near NASA. I would love to share example which I fell through. And 3.6 million the seller invested to bring this 150 units into A class from a C class 1978 built to 2014-15, right? I bought it in 2014. So he did everything in 2012 and 13. And guess what? Spent all this money, new balconies, new interior, all steel appliances, crown moldings, never went into the sewer lines. When I bought the deal, guys, I had the sewer backup Monday morning. I close on Friday. Monday morning, it's all stinking all over. They were trying to hide it, I think, to be truthful. You know, they were dropping some chemicals or whatever. It cost me $42,000 per building to take care of it, you know. So it's very important that we do good due diligence. But I'd like to ask them what percentage of the units have been renovated and how they look like, all that. Now you come up with a CapEx budget, right? CapEx budget, it's cheap money if you get financing for it, right? So if the local bank, in your case, in my case also, like in Houston, I was buying a lot of C class, you know, C plus like that. And the local banks were giving me 80% of the future value. Okay, what's future value? After renovation. Mm-hmm. So they would give me the loan, but they'll keep the CapEx in their bank. As I use the money, they'll keep on giving me and it became part of the loan. So that's a good way to do that with the local bank. And there's a ton of money, guys. I'm telling you, there's a ton of money in the local banks. Please check them out. Then the other part is the money that you put it into the Excel worksheet, you know, getting from the investor is costly money, because if you're giving them 14%, total equity and the cash flow per year, or 20%, let's say, per year, that's very expensive money. So try to figure out a bridge loan, get to the local bank, or if nothing happens, raise the money from the investors. If the deal is good, it's going to cash flow still very nicely. Because see, if you put that money raised from the investors in the cash on cash, that number gets bigger, right? At the bottom, that drops it down your COC. So I try to do it in the deals where I have to do renovations, major renovations, try to get it from the, local bank.
That's great advice, right? Take the cheap money. 3.5% you mentioned a moment ago is what you're getting on a large deal, but still, I mean, 4%, 3.8%, 4.2% is still cheap,
very cheap
money. And to your point, it may go down even further. And we'll ride this wave, I guess. I think we have a couple questions, Ben. Am I wrong with that?
Here's a question from Daryl asking, do you use different strategies to purchase different class of properties? And
okay,
I'll further that question a little more and selfishly and ask if you still see mom and pop owners as you go like higher in unit counts, like the 200, 300, 400.
Oh, that's a good question. Yeah, do you still see those mom and pop owners? Yeah.
Very good point. Very good point. To be truthful, I want their price sheet. When I get the deal, I want to see what they're leasing at. Now, remember, lots of mom and pop, owners, what they're trying to do is they are increasing the market rents in their software, to give you an indication that, there is loss of lease of X amount. But you got to do your homework. I call it homework. You go on apartments.com, you look over there, where this property is that you're buying and go to the next one and the next one and the next one and open up there. What you see on apartments.com, 87% of the renters, they go on Google and they advertise so heavily that they show up first, right? Apartments.com and all. So please do your due diligence to find out what the current rents are. What's the vintage of the property? Many times in the operating memorandums, we found that true. They will take one property close by, which is higher rent, and then go too far away, 2 miles away, another one. They miss the other properties in the neighborhood. When the people are coming there, they're not going to go 3 miles away to rent. They're going to be renting where their job is or where the school system, all that stuff. So please look into that. You got to do your own due diligence. Take the, the price sheet, I call it, price sheet. Have the broker fax it to you from the property right away in real time. They should do it right away because they want to sell it. Mom and pop many times try to, I shouldn't say scam, but they try to put numbers in different places to confuse you guys. I'm telling you. So you got to look at the rent roll made by you, not even made by them. And then you look at gross potential rent, you look at the upside, and then you want to find out what the expenses were from also the seller. And that's where you have to do, even if you do 50%, running that property at 50%, that will give you a pretty good idea where you might be able to take it. So I don't know if I answered it correctly. The key thing is in the bigger properties, like in the 20 millions, 30 millions, and 50 millions. And we just actually walked away from $74 million deal, by the way. We just did. I mean, we got approved and everything, but we found out a company, insurance company, overbid us, and the broker is kind of a friend of ours. So he says, they are at this point. So we said, we'll take it back. We're not going to go into best and final. So we do that. The good part is that as you do bigger and bigger deals, the numbers are more in a software-like things. I have bought properties, where it's like Excel worksheet here, Excel here, Word document here, Ben, but I have not let them go. If the property is good, if the numbers, we can make them work, I have bought it,
Makes sense. Yeah. So I think you answered the question perfectly. Strategies for different classes. Yeah, I think you answered it perfectly. There's a question here about, can you use cost seg just on commercial or on residential multifamily? I think that might be our last question before we kind of wrap up here, but Vinney, correct me if I'm wrong on this. I would say that residential, whatever it is, I think the value of a property, as long as it's over, I don't know, probably $600,000, the property value, not the land value, but the property value is probably where it makes sense to cost seg. But below that, it's probably not financially viable to do so. Is that fair?
I agree. Because see, there is a cost involved, right? To get this study done. Of course, I like to bargain all the time. I like to save money. So I found in Houston, a company, O'Connor's, I think, and they, I don't know, don't quote me, but they gave me for $4,500 only. Usually they charge 10 or 15,000. In Atlanta, I did it for only 6,000 cost segregation study for my 267 unit and my 191 unit. So the key thing is for residential, it makes sense. For hotels, it makes sense because each part of the structure veers off at a different schedule. It's IRS ruling. The more you feel, and you can even run it by, maybe 15 units, property, 20 units, and you just talk to one of the local companies. They have an easy way to run some numbers and they'll tell you what the savings are without even paying any money, by the way, So I will highly recommend that because cost segregation is a tremendous opportunity to have a profitability go down because of the paper depreciation. But you have to catch it up when you sell it. So if you're selling the property within 2 years or flipping it, it doesn't make sense, Right. If you're keeping it for 3 to 5 years, it makes sense.
Makes sense. That's beautiful. That's great. I mean, you dropped, I got notes everywhere here. You dropped a ton of information on us tonight, Vinney. I mean, it's unbelievable. You
Hey, a lot
27
of
deals.
information is here too.
I was going to say, I want to hear more about what, you know, where can people find you? Where can people learn more? Give me everything. What you mentioned, your mastermind, I believe you have a book. Let's have it all. I want to hear all about it.
You know, my book, thanks to everybody. I mean, I got 102 positive comments, 5-star. One didn't like my book. I think one person had gave me 1 star, but 101 are 5 stars, and it's international bestseller. We also have audio version coming up. Kindle is available, and we have made it only 99 cents for your audience tonight. 99 cents for the Kindle edition. If
Wow.
anybody would like to go on Amazon, you can get it tomorrow. It goes back to $4.99. $4.99 is the Kindle, and then $12.47 half price. I want a lot of people to get it. Really, I mean, I'm not making money in this. It's just that I love to pass my information, and a lot of things I'm discussing are all in here. All my plates, all my Excel worksheets, everything. So I give it away. Then my website is VinneyChopra.com. VINNEY. Chopra.com. My business advisor, John, wonderful, wonderful person. Please email him, John, Jon, at VinneyChopra.com. John is so prompt and will get you all the information you need about mentoring and everything. I just wanted to make a point. We invested very little. I'm not talking about 40, 50,000. I'm talking only 5, and we might even give a little rebate for everybody that joins tonight or whatever, you know, no problem. So I coach myself, by the way, every Wednesday, master coaching. It's recorded, and those who cannot make it, we do deal analysis. We do lots of different things.
You know,
And
I want to plug this personally, and I haven't, Vinny, I'm not in your course, so but I'll say this: I know your content. I didn't know about you when I entered multifamily. You know, Ben and I met in a different group, but the value that you, there's 3 or 4 of you out there that really, I think, doing a fantastic job, and I know people that are in your mastermind, that are in your group, that have gotten a ton of value out of it. I could just tell you on my own. Yeah. I was like, yeah, okay, I'll look at a deal or whatever. I go into a community, I meet the guy in pink down here, the freaky Frenchman himself, Benoit Malige, and we partner up, and 9 months later we had our first deal. I wouldn't have done that without the value of being in a community. Yes. So definitely go to VinneyChopra.com, John at VinneyChopra.com. John's been amazing. John Rusin, who's a Michigan guy. I want him to get up here soon to one of our events. So Vinny, push him, please. But guys, I encourage it, man. I just do. I know people feel like they look at the money, but I put money in, and my net worth has gone up 6 figures as a result of putting money in.
Oh my gosh, my net worth has gone 6 times. Oh my gosh.
You don't have to brag, Vinny. So,
but the thing is, it's the investment. See, it's never an expense. And, you know, again, we are all products of what we really get into our mind, how we mindset, how we look in abundant, and how we really analyze deals and have those relationships with the investors and brokers and things like that.
I love it.
It's also the investment becomes a commitment, right? Now you have skin in the
game. See, that's a huge part. I'm so glad you said that, Ben, because many times people say, oh yeah, I'm looking from the internet and all. 4 years later, they call me literally, and I keep track on my iPhone. I keep track whenever I talk to anybody. I say, where are you now after 4 years? Oh, same place, you know, so it's amazing. Yeah.
That's great. I just want to shout out a few people: Daryl, Hendra, Corey, Grant, Paul Gallagher, Christine, folks that have been participating tonight. I think it was Stephen, our apologies for missing your question in the Q&A. Love that you guys jumped on. I appreciate you guys participating. Vinny, unbelievable content. I think Ben dropped the link to the book in the comments here. So folks, click on that link and grab Vinny's book. 99 cents on Kindle tonight, back to $4.99 tomorrow. And check out his mastermind, check out his coaching program. I'd highly recommend it. So Vinny, thank you so much. I appreciate your such valuable time. The content
oh my gosh,
is amazing.
My pleasure. Totally. It's totally my pleasure. I'm humbled you asked me to come, and please keep up the great work. And you guys are awesome. And let's just make it happen. My goal right now is to really teach lots of people in the Silicon Valley. 26 trillion with a T is in the retirement funds, and only 4% is in real estate. So my goal right now is to teach all the big entrepreneurs and doctors and attorneys, million of them, My goal is million, to move them to have the best retirements and best lifestyles by investing in real estate in multifamily, because they don't know. They put a lot of money in stock market, a lot of money everywhere, but they can do self-directing of their retirement plans and invest in real estate.
I love it. That's great. I think, yeah, that's fantastic. Because I didn't know that 4% of all that money was in real estate only. Very cool. All right, cool. Well, we'll get you out of here. People are saying they already have the book down here, so that's awesome. We'll get you out of here. Benny Ben, nice job, buddy. First one.
Thank you.
Thank you so much. And God bless you. Love to come back again. If you will need me, I'm right here for you.
Anytime. We'll take you up on that, Vinny. Thank you so much. Thanks to everybody. Have a wonderful evening. I appreciate you stopping in.
Bye-bye, everybody. Thank you for your participation. Thank you so much.
Good night. Thanks again.